Good morning. Today's topic for the weekly video call will be the correlation between US bond yields and US equities. Then I will show you a couple of charts on precious metals, which are back near important slash critical support zone, and the dollar yen, which is back on a resistance. So the question is whether it's ready to break out or not. So first of all, here you have on the upper chart the red line are US 10-year bond yields, so that's this chart, and the white line is the S&P 500. So we can see the bull trend here. And on the lower part of the chart, you have the correlation between the two charts, so US 10-year bond yields and the S&P 500. So as you can see here, so the correlation coefficient is at half 0.50, which is a pretty strong positive correlation between the two charts. So what it means that usually when US 10-year bond yields are going up, it's bullish for the equity market. And when on the opposite, when US 10-year bond yields are going down, it's supposed to be negative for US equities. So as a follow-up of last week's comments, so I highlighted that US 10-year bond yields were breaking above an important resistance at 2.40%. So instead of a breakout confirmation on US 10-year bond yields, we saw a pullback below this level. So the breakout was not confirmed at this stage. And the S&P was more or less flat. So no significant bearish reversal. And on the other hand, a quite significant setback on US 10-year bond yields. So for me, there is something not matching. I mean, if US bond yields are going down and the US stock market cannot really continue to go up, according to this correlation. So we have two possibilities, a new breakout above 240% on US bond yields, or an S&P 500 starting, let's say, I wouldn't bet on a pullback yet because the trend is very strong, but at least a stabilization of the S&P. So my preference personally, I mean, the message from the bond market is that bondholders are not really ready to dump everything on the bond market. So probably the pessimism we saw last week on US bonds was too strong, and the pullback suggests that yields are not ready to make a significant upside acceleration. So a quite toppish message for the S&P at this stage. Another quite interesting thing, so that's the S&P 500 E-mini future. So this is a 60-minute point and this is a 60-minute chart. So as you can see here, although the S&P remains close to record highs, we have seen since last week several intraday sell-off near the end of the session. So that's you can see the red arrows here. So in numerous days, we saw significant intraday sell-off near the close. So usually when the market is becoming toppish, that's what we see. So it means that smart money is starting to book some profits on US equities. That's usually how they work. There are sellers selling more aggressively near the end of the day. So this is an indication that we are starting to see smart money sellers since last week. You can see that on the SMART index on Bloomberg, so it's the Smart Money Flow Index. You can have a look at this index. It's just the spread between the performance of the S&P 500, or I think it's the Dow, during the first 30 minutes of trading and the last 30 minutes of trading. So retail investors are supposed to be active at the start of the session, and smart money is supposed to be more active at the end of the day. So usually when you have weakness at the end of the day and strength at the start of the session, it's usually an indication that we are starting to see distribution. So as you can see, this is the white line. So the smart money index is going down since last week, which illustrates what I told you. So smart money becoming more cautious on the US equities. Another topic is, I think it's quite important, this one, is what's happening on precious metals. So nothing really strong happening on precious metal at this stage, especially on gold, which remains pretty weak, but stabilizing above its 200 moving average. So that's the purple line you see here, with the start of a bottoming process on MACDs. So this is our daily MACDs. So I think that gold, although weak, is at a critical juncture and possibly starting technical bounce above the 1260, 1250 area, which remains a critical support zone. So at this stage, at least, we are not seeing any breakdown. But I think that it will be quite important to keep an eye on this chart in next week, I would say. So what I would like to see to validate the bull case on gold is a new breakout above 1300. So keep an eye on it. Also keep an eye on, this is a platinum. So this chart is still fairly weak, a bit like gold, but close to a key support at 900. So once again, I would recommend keeping an eye on it. And we see here that there could be more or less a double bottom forming, but we'll definitely need to see a breakout above 950. Another important chart to keep an eye on next week will be the dollar yen. Because if we start to see a technical bounce of precious metals, of course it will be pretty negative for the US dollar. So it means that we could start to see a pullback after the recent strength on the US dollar. And I think the best indicator to see the start of a pullback on the US dollar is the dollar yen. Because dollar yen, as you can see here, is back on a very important resistance. So a key resistance at 114. Spot 30. So it's a very important resistance. I think we are going to have a breakout in the medium term, but in the short term, dollar yen seems a bit toppish here. So what I would favor is a pullback here, and later probably a breakout, but not in the short term. So that's also one important chart to monitor next week with precious metal. Thank you for listening, and have a nice day and a nice weekend. Bye.